Hello traders, and welcome to the market opening preview on a Thursday, October 27th, 2016. Traders coming to you from Thailand. Finally, bright blue sunny skies, beautiful morning. We had horrible weather yesterday afternoon. In fact, it was so bad I had to shut down my systems. That's right, too much lightning. Me, lightning, and computers don't go together. So yes, I was basically out of business. No New York and no after the London lunch. I was out. So I'm all fired up back today. And what happened to that screen? Okay, traders, it's October 27th, 2016. And coming up to the end of the week. Crazy charts yesterday, huh? A lot of overshoots of levels. The market is really walking on eggshells, so we'll keep an eye on that. Traders is brought to you through FXCL. FXCL Excellence in Trading. Traders, please come visit our website at fxclearing.com for your trading solutions. Traders, like I said, great to be with you. Coming to you from Thailand, currently 7:22 in the morning and 23 on Wall Street. So, yep, and that's on a Wednesday night. They haven't come into Thursday yet. All right, traders, let's get a move on. I messed up on this slide. I don't know how I did it. Oh, my goodness. Traders, we're going to really mess this one up, huh? All right, so, traders, you know that trading the Forex markets has a large potential rewards and a large potential risk, and you must accept them to invest in the Forex or any other financial markets. Traders, please do not trade with money you cannot afford to lose. Traders, remember, this is a game of capital preservation. Live to trade another day. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. I don't know what I did with that slide. It looks horrible. All right. We'll fix it. Traders, let me introduce myself to you. My name is William Gillihan. I am your host for the market opening preview series every single trading day before the London Open. Traders, I started trading in the year of 2006, and in 2008 I retired from a wonderful 27-year career as a firefighter paramedic out of the great state of Florida. Traders, I'm a pullback trader. I like a currency pair in the direction of the trend. Give me a pullback. Of course, Forex does not move in a straight line. Give me a confluence area, pivot point, Fibonacci level. What's going on left of the chart? If we're going to buy it, we got this at support, and we just want to take it to the upside, right? Now, that is an important part of my technicals. However, there's more to technicals than that. One is I look at price action, price structure, price failure, and price levels. Price levels are really important because Forex repeats itself, and that is a good thing for us. That's an advantage for us. We don't have many advantages as retail traders if you're, a retail trader, not a corporate trader, right? So, as a retail trader, that's good news for us because I have one platform. That's all I have on there is levels. So if I'm going to go to take a trade, the first thing I do is I look at that platform and see where's my level at. Is that going to be an indicator of what's going on? The other thing, traders, is the first thing you need to know is candlestick patterns. There's only seven of them that you need to know. But you need to know what's an indecision candle, what's a decision candle, what happens when you have a formation of 3 or 4 of those candles in a clump. It tells you a story of where you can expect price action to head. Is it 100%? Absolutely not. If it's 75%, you're doing good, right? Now, the other big thing I do is I listen to fundamentals. Fundamentals is really important. You need to know what's coming out in the data. You need to know, is it going to affect your trade that's possibly open, or is it going to affect your trade that you're getting ready to open? So fundamentals is, please always have, shrink it down, but always have your economic calendar where you can just click a button and see what's going on really fast before you enter your trade. So what I do is I take my fundamentals and I take my technicals, I put it together, I come up with a trade plan. After that, I put it on a chart. All I do is put alerts on my chart. And when the alarm goes off, the alert goes off, I go back to my charts, take a look, see what's going on, and decide if I'm going to enter the trade. I did have somebody send me a message the other day and ask me why I don't put in market orders. I'm not against market orders. I think they're a great idea. I really do. But I do the work I do, I'm at my desk a long time. So it's not an issue for me because I don't keep trades overnight. So if I'm not in a trade by London lunch or the first hour of New York, there's a good chance I'm not going to get in the trade because I don't turn my systems off until I'm break even, right? And once I'm break even, it's a free trade. I can wrap it up. So yeah, that's basically what that's all about. But I'm not against market orders and limit orders. I do use a lot of limit orders, by the way. I use limit orders all the time for taking profit. Okay. I'm also a scaler. In other words, I go in at full throttle, my maximum amount of lots for that trade, and as we get profits going down the line, I scale out of my position. Okay, and you'd be surprised how small I trade, my friends. Don't trade big. You know, I usually only trade between 3 and 5 lots, right? And those are mini lots. However, I'm usually in 6 or 7 positions at a time, so that's quite relevant. My theory is trade small, but trade a lot, and you've got to be in the market to get to win it, right? You got to be in the market to stay on top of what's going on. Okay, all right. That's a little bit about me and my trading. That's enough about that stuff. And let's head over to news and commentary. Let's take a look at some couple of interesting things. Gold maintained yesterday. It's back down to 1.266. It took a 0.05% loss yesterday, which is really nothing. The big one I'm concerned about is crude oil. Crude oil is still below $50, and it's sinking slowly. But it's at 49.21. However, at the close, it was up 0.06%. So just keep an eye on that. What else we got? Let's take a look at some indices. What's going on with the indices? S&P closed down 0.17%. 0.17%. That's not a good thing, my friends. Got to be honest with you. And that's what's going on with that. Don't have a lot to... And the euro is down, which we'll get to in just a minute, and that's not a surprise. Let's look at the economic calendar today. Not a lot really happening today. A lot of medium impact. We did have New Zealand had trade balance was a bad number, and that was month on month and quarter on quarter. That was a bad balance, a bad number. Japan had foreign investments. However, there was no forecast. However, it looks like it was a good number because it was 85.3. Previous was 70.0 billion. Okay. Aussie, nothing. Low impact data. I don't think that's going to affect anything. And as we move along, we get into the European session. We got the Great British Pound's GDP quarter on quarter and year on year, both high impact data. That will be watched very closely. I guarantee that. Then we get all the way down to the U.S. session. We have core durable goods today, month on month. So we will keep an eye on that. And traders, that really... Oh, we have... Oh, pending home sales today. Pending home sales out of the U.S. today. And going into tomorrow, we have a lot of... Japan has a lot of medium impact news data coming out tomorrow in the next Asia session. So let's keep an eye on that. Really some good stuff. The charts are hard, folks. I said this yesterday. Don't get discouraged if you're taking some hits, okay? This is just really tough. We're all taking hits, right? It could be a red month for me, depending on how the next week and a half goes. So, we'll see how it goes. We're going to get red months. I only get about 2 or 3 a year, maybe 4, but, most of the year I'm green at the end of the month. And it's just, it is what it is, folks. We got this crazy presidential election in the United States. It's not helping at all because the markets are just like standing still waiting for this thing to be over. I think it is over, but... So, anyhow, commentary is we're going to keep trading. We're going to keep looking ahead. I will share with you that I told you that I trade options in the New York session. And traders, I'm going to tell you, I'm in like 14 open positions, and I had to close like 8 of them. I think 1 out of the 8 was in the green. Yeah, I took some hits this week, and I've been in these options for 90 days. And that's when the market decided to do its thing and like started going sideways, coming down, coming back up, right? Just nothing going on. So yeah, we take hits. And the good point is I had very good money management, and we took a loss, but it wasn't more than 2% of my account, and that's fine with me. All right, traders, that's enough about that. I think we have a great trading opportunity ahead of us. Let's get to the charts. This is the New Zealand dollar. This one I do not want to trade. I brought this back up on the charts today because we talked about this yesterday, and I said this was not on my radar screen. Right? I said I don't want to even look at this pair because it's not going to do nothing. Well, traders, look at this pair. It hasn't done nothing. This is yesterday's chart. We're at the same spot we want to sell from yesterday. Nothing to do here. This has got to break. And for me to get in this has to be a prominent red candle to show me that this has some sort of direction. And now it's coming to the end of the week. So my opinion is this will not be on the watch list today. If you want to trade it, look for an entry at 0.71, like 35. I'd go another 13 pips down and then get in it. But I wouldn't get in it where it's at now. This is some nasty price action left of the chart, and it's holding. Look at how many times it's hit this price level and it's holding. And this is a 1 hour chart, folks. This has hit this current price where it's at a lot. Okay, and it's at 47. 1.71, 47, we're at 48. So just got to be really careful with this. Just hold it on and just let it wait. Again, it's not on my watch list today. Let's take a look at the euro. Okay, this is something I want to talk to you all about. So what happened here? Okay, so the euro had something came out yesterday, and I just lost my mind. Anyhow, something came out. The euro pulls up. This is a 30-minute chart, right? Euro pulls up. All the traders out there say, oh, the euro is bullish. Okay, the euro is not bullish. This is bearish, okay? I don't want to buy the euro. I want to sell it. Listen, folks, the dollar index took a hit for 2 days, right? Big red candles. But they're still above 98. So, I consider the dollar taking a hit when it's back down to 94 or 93. As long as we're above 98, the dollar is still very strong. The dollar is still very strong. This situation is all about what is the Fed going to do, and this is all about the U.S. election, and this is about the dollar just swirling around there and investors not knowing what to do, right? Rumor says Hillary's for Wall Street, Trump's not for Wall Street, and if Hillary gets in, the markets are going to go skyrocketing. If Trump gets in, they'll take a little dip. Now, the media doesn't tell you that. I'm telling you that. It's going to take a little dip, and it'll go back to normal. Right? Just look in the past, folks. It's so easy. This is not, rocket science what's going on with this election. However, as traders, we just got to be on the alert, right? We got to know what's going on here. So I want to sell this. Now, I don't want to sell it with a confluence to the 10 and the 55, and right below it's a 200. So you know what? I'm going to wait for this to close below the 200. Let's get in it at 1.0886. We'll get out of it at 1.0854. It's only a 32 pip trade, but at the place to take profit at that 0854, listen, if it goes through it, just keep letting it run. Just let it go. Take 2/3 of your position, stick 1/3 on there to see what happens, trail it, and let the market take you out when it wants to take you out. Maybe you can add another 20 pips before it turns around and pulls back up and knocks you out. And then just leave it, As long as you got to pay yourself first, folks. I was a young whippersnapper, and I was in Florida, and I went to see this guy called Jim Braun, and he's a Jim Rohn, sorry, R-O-H-N, and he was a motivational speaker, but he was a millionaire. He went broke, he became a millionaire again. This guy was really, really sensible, and the biggest thing he said, he goes, I don't care what business you're in, you always pay yourself first, then pay everything else. He goes, you got to pay yourself first. And wow, I took that to heart. Even when, I sold Aflac insurance in the U.S., even with that, I always paid myself first. Then I bought sales stuff and marketing and all that, right? All right, enough on that. Boy, I'm getting off on tangents today. I must be too awake. All right, let's take a look at the dollar CAD. Dollar CAD, again, this is all about oil, folks. This is all about oil, and I see it's up there. I see it's up there, but oil's down. It's below that 50 mark, and look at how the CAD's reacting, right? Now, I do not want to buy this. And I know a lot of you are saying, why do you want to buy this? Well, number one, this is a 4-hour chart. Okay, this is a 4-hour chart. And this is at pretty significant resistance. It's touched this 1, 2, 4 times. Hasn't been able to do anything. Keeps getting batted back down. So what I want to see is, I want to see this give us a nice engulfing red candle towards the trend line. Now this one, it's a good chance I would get in this if I had a bearish engulfing candle. I would just get in it. Just get in it, right? You know, I'd love to see a hangman up here at resistance. Then we can just get in this and take it to the downside. And I'll take, you know, it's only a 2-touch trend line, so I'll take the risk that it's going to, if it bounces, it bounces. If it doesn't, it doesn't. But, and then just get in it. If you want to be really conservative, you can wait for it to break the trend line, retest it, and then take it at 1.3296. Another way to get in it early is, folks, just go down to a 30-minute time frame and see what kind of entries you can get there. We're still all going to get out at the same spot, and that's the 200 exponential moving average at 1.3189. There's quite a bit of price action at the 200, so we'll get out at that level. Again, maybe scale and just leave a little on the table to run away and see if it happens. All right, let's take a look at the Aussie dollar. You know, we talked about this yesterday because I put the Aussie back in there, and this just decided to take a hee-ho to the upside. And, you know, and then absolutely all day long decided to come back down, right? Now, they had data yesterday, and it was good data, and that's what that big blue candle is. So it went sideways and then came down. And I was in it. I listened to other trading rooms, and I was in the trading room, and the moderator saying, like, to buy this. And I'm like, what? Buy this? This Aussie is bearish. Long time. I don't want to buy it. Folks, if you counter trend trade, that's wonderful. But be an expert at it, right? No matter what you do in your trading, just whatever system you use, be an expert at it. There's no way I would say to you, hey, let's buy this at this level because it's at support. Because it is at support. I agree with you. So we just wanted to break the 200, retest it, and then we'll try to get in about 0.7620, right? And just take it down, right? And if we take it down, we still got a 70 pip trade to the downside. So we're okay, right? But there's no reason to be buying the Aussie dollar. There is nothing bullish about the Aussie dollar. Oh my goodness, I have 2 Aussie dollars. Oh, sorry about that, traders. All right, last one of our day, and that is our Euro Yen. You know, I said this was going down yesterday, and it didn't do it, by the way. And this is a 1-hour chart. So it was heading down, it came back up, and it's continued to come up. And now we're in Asia, and this thing is pounding at this resistance level. And this is going to do one of two things. This is either going to continue to the upside, which is possible, or this is going to get weak. Again, we need some candles that are going to show us that the bulls are running out of power, right? We need some candles like dojis and hangmans. And, you know, we need some stuff, weakening candles, indecision candles that tells us that, you know, we got a good chance for this to come down. Now that the candle before this one was a nice candle, right? Doji, you would think that this was on its way to the downside. Nope. We get a decision candle to the upside, but cannot break that resistance level. So we want to sell this. So I'm just waiting for this to sell. The other thing is I'm not concerned on this chart about the 200 exponential moving average. There's very little price action interfering with it. So I would just stay in my trade, and I probably wouldn't move my stop until I was below that 200. It could bounce, right? Now, remember, stops are for emergencies, right? We only use stops if your power goes out, your computer blows up, you don't have your broker's phone number in your phone blows up with your computer, whatever. If I'm in a trade, folks, and I get 2 candles, and it's against me, so I'm getting, you know, no, I'm out of there. I'm not going to wait for it to hit a 40 pip stop. If it's wrong, it's wrong. Get out. If it's not wrong, I'll re-enter it. Right? We can always re-enter it, which is common in Forex trading. We do that all the time. Trade goes bad, get out, let it make its move, and then we just re-enter it. I do like this trade, by the way. I think it's a very healthy trade, and we just want to see this head on down to 113.30. You know, this is a nice 70 pip trade if this works, but we'll see. And we have German data coming out in London, so that can jolt us a little bit. So we'll see. But I'm definitely bearish on this. Traders, on behalf of myself, William Gilday, and our great friends at FXCL. FXCL Excellence Trade, I want to thank you for joining me. October 26th, 2016, on a Thursday. Great to be with you. Exciting day ahead. I'm looking forward to it. Finally, we got some sunshine in Thailand. I can see the water is blue, and we are ready for another day sitting at the office making some pips. Traders, always remember to trade smart and not hard. Traders, we'll catch you in about 24 hours, and that'll be on a Friday. Take care, my friends. Talk to you soon. Bye-bye.